Hello, YouTubers! Happy New Year, and I hope you had a wonderful Christmas or festive period, depending on what your religion is. So I just thought we'd do a little update on the Trading 212 portfolio. I haven't done one for a little while, so sorry about that, but been a little busy, especially with the festive season. So one of the things you'll note that has happened is you'll see the portfolio has gone down. I was on at about £32,000 previously. As you'll scroll through here, you'll see there is no longer Lucid Motors. That is not because I don't believe in them at all. I just actually chose to take some of the profit out. Obviously, I think I've said before, I've actually got to 100% of my ISA allowance now for this particular year, so I can't invest any more money. And I actually have a reasonable sized tax bill coming up at the end of the month, so I actually cashed in my Lucid position and took the profits just before they actually started going sort of down, if you like. So you can see here, I got up to about £33,000 here. We got down to about 31, something like that, 30 and a half. And then I withdrew that Lucid profit. So as I say, to fund a tax bill, or part of it anyway. So we'll say thank you to Lucid for that. So that's been pretty good, in terms of funding that. And as it stands as of today, which is the 3rd of January, we're on about a 2.54% with Lucid stripped out, but you can see we got up to about 30% return, and at the point of withdrawal, I think it was around about 20%, something around here anyway. I think I cashed it in, and it stayed in the portfolio for a while. This is actually the moment when I drew it out here, where this obviously dip goes down. So what's been going on? Well, you'll see we've got a new stock to the portfolio, Airbnb. Not performing particularly well, and haven't really put a lot in there. As I say, I can't actually put any more in until the new financial year. Do believe in Airbnb, Booking.com, all those kind of things, because I think as things move forward, it's definitely a area in the property sector which I think people are beginning to merge into. Buying property to rent them out on short term as a strategy, and also people renting things like outbuildings, spare rooms, all that sort of stuff, more and more. So I think they'll be profitable long term. Apple's done particularly well for us, as you can see, up to 35% return on that, pretty much, give or take a few percentage. That's been performing pretty well. What hasn't been performing very well is Robinhood. It is down massively, almost wiping out all of the return on Apple, and that is pretty much how the stock market goes. Sadly, it's actually below its original IPO price. So when they launched the ability to buy the stock around here at $35, and then it obviously shot up to about 60 odd up here, and then around about November it actually went below its IPO price, and it has just continued to plummet since. It seems to have sort of stabilized around the kind of $18-19 at the bottom here. Had a little bit of a rally of recent, but not a significant amount. My average buy price here is at $27, so you can see it's quite a significant loss. Also Block, which was Square before, that's down a little bit, 24%. PayPal, fintechs, they are not doing so well at the moment. Coinbase is down. That actually got to about a 40% return, so still in the green with them, but is down. Tesla, that's gone up massively today, around about 11%, I think it is, on one day. Well, actually, here we are, 13.52% in a day, based upon the beating deliveries. I think they'd done something like 300,000 when they said they were going to do like 260 to 270. So by beating that, that's really fired the stock market up. The Vanguard portfolio here has actually sort of maintained its £67 £67 price tag for a week or so now, so that's quite good to see, because it was kind of dipping around the sort of 66, 67, and it would go back down 65 and back up. So that's quite good, and that is giving me a 8.9% return. So that's pretty much that portfolio. However, as you can tell, I personally have used up my ISA allowance for this year. So I've actually got a general investing account, which I used to hold with Trading 212, but I've actually I sold that Neo and whatever it was I held in there, I think it was just Neo, and pumped that into this particular portfolio some time ago. The thing with a general investing account, obviously you will pay tax on the profits, but you get your tax-free allowance every year anyway, £12,500 currently. It might be slightly more to 12,700 or something. I'm sure someone will correct me in the comments, but so you get your allowance. And the thing is if my general investing account ever returns more than £12,000 profit or return, and I decide to sell, obviously I do have a yearly allowance, so I could cash it down in those periods. So in order just to spread the love and the money around, I've actually opened an account with Freetrade, of which I've put further £4,000 in there. So obviously some of this is possibly the money from the sale of Lucid from the previous portfolio, but as I said, most of that's being used on the tax bill. So I've gone in a little bit more tech here, but different types of tech. So we've got Meta, Alphabet, Neo, to replace the Neo that I sold. More Robinhood, just trying to hedge my get some stocks whilst they're down. Obviously I can't buy any in the other in Trading 212. Matterport, Etsy, more Block, again I can't buy any of that, and the other one Go Ahead Group. My plan with them, they're a bus company basically, and their share price is like right bottom down, almost like original lockdown values really. So I'm hoping that it will rebound by next summer, even up to like this £13, and then I shall probably sell it. So that's more of a recovery stock, and obviously a UK stock as well. So I'm trying to diversify myself a little bit. Microsoft, Enphase, Disney, Nvidia, AMD, Roblox, and Podpoint. Podpoint do the charging points in the UK. I don't see too many of them, but apparently they are one of the leading UK providers of charging points. You see them a lot of Tesco's. You can actually get free charging at Tesco's, but it's often very low kilowatt. Not that I don't know if people know too much about electric charging, but basically 7.5 kilowatts, pretty much what you have at home, and on your average sort of medium-sized car, that will take about 7 hours to charge up. 6 in the summer when it's warm, and as many as 8 or 9 in the winter when it's cold. And that's what Podpoint sort of seem to specialise in, which I'm not sure there's going to be a massive market for that, but there is a big market for EV in general, and as you can see, since I purchased it, we're up about 3 or 4%, so looking to invest some more money in that at some point. And then on the watch list down here, just to give you a thing, I'm possibly thinking of doing Cineworld as another recovery stock. That's right down at the moment. A firm, I think they will probably do quite well in the long term when people, stop borrowing money, and obviously they make their money off the interest and things like that. And then I've got my eye on things like Visa, Amazon, obviously Lucid is still in there, and then Naked Wines, they're like a sort of subscription wine service in the UK. They're actually down a little bit at the moment, but they did actually get to reasonably good peaks not that long ago. So that's the sort of portfolio there. Obviously, as you know, I've got the other Vanguard ISA portfolio, which is historic. So that's all in all, add all of that together, you've got kind of best part of £54,000. Plus, I obviously, in terms of hedging, waiting for possible market dips, and obviously always good to have a little bit of cash on hand. I've actually got a savings account with Paragon, which has got about £5,000 in it as well. So altogether, just probably a little shy of 60,000, maybe around that sort of invested in the market. And then you add the pension in there, which is held in various funds via a company that managed it for me, St James's Place. All in all, we're looking at about probably £82,000 invested in the market across all of those things. So obviously goal in 2022 is to try and break the 100,000 mark. So anyway, I hope you like the video. Obviously, please don't just follow what I'm doing. As you can see, this particular portfolio is down £55. So you can lose money as well as gain money in the stock market. You should do your own research. I'm not a financial advisor. You need to make your own decisions on things. But with that said, if you do like the content and various updates here that I've given, please do hit the like button. Don't forget to subscribe, comment below. It really does help get the channel out. I'm hoping this year we'll try and grow the channel and get more subscribers and a bit more view time as well. And I'm hoping to do a bit more frugaling tips and things like that, videos face to face as the year progresses, and get a bit more time on my hands for that. I've also got some updates coming on the various properties that I've been refurbishing and things like that. They've all sort of come to an end now. We've got one still ongoing, which is a rather big build, and then really the journey of looking for the next lot. So don't forget to subscribe, hit the like button, and I shall see you next time.